what were the different views as it relates to the decision? Was there any member that was pushing for 100 basis or 75 or anything below that, or even for the Repo to remain SS? So that's the first one. And then the second one, Governor, you spoke to outflows. I think we've seen since South Africa increased their Repo to 8.25, it was at 100 basis differential. What were the outflows in relation to that, the commercial banks or investment side? And then thirdly, what is the NPL number, I think, at the end of, or whatever the recent number is for NPLs? And then the last two questions, or the one also relates to NPLs, is Governor, there's been, we've received, I think, as media, number of complaints from the public that the commercial banks are somewhat forcing them to an extent lose their homes. And at one point there's even a call that there be an introduction or formation of an office of the banking sector's ombudsman, because the general public feels the complaints that are being directed to the central bank are not treated with the urgency and with the necessary attention it deserves, and people sometimes end up losing their homes. I mean, over the last 3 years or so, the last numbers I checked, over 4,000 plus minus, for close to 5,000 cases or complaints were reported to the Bank of Namibia, of which most of them were solved, but a key concern still remains that the bank is not doing quite sufficient on that front to not allow people not to lose their homes. I think the question being around that would be, I think there's an issue of maybe capacity within the central bank to attend to these issues or what, but really seems to be the concern. And then the very last question is I see, I was making comparisons yesterday with the other countries in the CMA. In Namibia, there's also, I guess, within some of these coming agreed to that we need to keep it at 7.75. That would be my last, a few questions for now.
The vote was unanimous to increase the rates. So the majority of the members of the NBC voted for 50 basis points. And there was one view that we should increase by 75 basis points, because the misalignment between Namibia and South Africa, the other country, is creating challenges. And we have with reality of a fixed exchange rate environment, and we needed to stay true to that. But again, a 75 basis point increase would be too dramatic. We wanted to have an orderly catch-up, if you call it catch-up. So currently we are behind the curve, and that deals probably with your next question, last reason you can come back in terms of the outflows. In the first 5 months of this year, we have seen outflows of about 10.1 billion Namibian dollars to South Africa versus an outflow of 7.75 billion same period last year. So it's around 2.5 billion more this year, and that's partly because of the interest rate differential. And when you unpack that and understand why and what the source is, it's mostly the asset managers and retirement funds that are chasing higher returns in South Africa, because they can earn 1% more in South Africa than in Namibia. And you can't fault them because they are appointed to optimize investment returns. So there's obvious arbitrage opportunity. But we also need to understand, why do we have the 100 basis point differential? The Bank of Namibia really wanted to support the Namibian economy. The situation was pretty dire. And if you look at a balance of events, the incoming data, there was a very strong case at that stage that we needed to err on the side of support to the economy. And in that process, we are 100 basis points below South Africa. My view is totally justified, but what we need to do now is try and catch up and close that gap before it becomes a bigger problem. That takes me probably to the last question. Did you agree, as Lesotho, Eswatini, and Namibia, to have the Repo at 7.75? No. It was totally coincidental that most of the countries probably wanted to support the local economies. I don't know what informed the decisions in the other two participating countries in the CMA that we are coincidentally at 7.75. But ours was, we had home closures, we have people who lost their jobs, we have got unemployment, so we needed to do something as a central bank. But again, we have got a constitutional mandate to fight inflation. And I really want to deal with this issue, and I've seen quite a lot of economists say increasing interest rates, it's supply driven, externally driven, it's not gonna do the trick. We totally disagree with that. In as much as we agree that interest rate is a tool that is best suited to deal with demand-driven inflation, what we are trying to do here is we want to safeguard the peg. We are in a fixed exchange regime with South Africa. We've decided to protect our currency. So we need to safeguard that. That says we cannot have 2%, 3% differential because we create on many arbitrage opportunities. Secondly, we want to manage the second round of effects of inflation. We want to anchor inflation expectations. And we have done a survey, and I'm pleased to inform you, most businesses expect inflation to come down over the next 6 months. So that tells us we are anchoring expectations. So the decision that we are taking is becoming critical. The third thing is we want to support the domestic economy. That's why we haven't really gone 75 basis points or 100 basis points at this stage. Commercial banks, the actions that they are taking for Namibians losing their houses, let me tell you, as the Bank of Namibia, there's a lot of empathy for people losing their houses. And the interest rate environment that we are currently in is not very conducive to that. That's why the bank has, you probably have seen in the meeting, we called a meeting with the Minister of Justice to see what can be done in that space. And the Ministry of Justice is dealing with what they can do that's within their domain. And you probably have published articles around that. So if you require more information, you need to chat to the Ministry of Justice around that. But we are concerned about that. So many people are also saying, the defaults are not declared by the Bank of Namibia last year. That people go to court as banks, and the courts decide whether they need to repossess or they shouldn't. So, and we can't get involved and tell the courts, thou shalt not declare this executable. So this is a totally different process. The second thing that we need to understand is the Bank of Namibia has got a mandate to ensure financial stability in this country. So we cannot just go and tell the banks, thou shalt do the following things. And if that doesn't work out, we are really interfering in, that's not consistent with our own mandate. So it's a very difficult situation to be in, that you supervise, you regulate banks, and you need to make sure that the financial system is stable. And that is not an easy responsibility to have. So we are navigating, we are engaging banks, and we came up with COVID relief measures. And I can tell you, those measures assisted. Many people would have lost their homes had we not introduced COVID relief measures, and that contributed to many Namibians sitting in their homes at this stage. And we know that is running till April next year. So, but we are concerned. Complaints that we are receiving, we are attending to that, but it's a fine line that we need to navigate between financial stability and keeping people in their homes. The banks are informing us it's the last resort. They are trying to do everything they can, but it's not good enough. So we as a nation need to look at, are there better solutions to keep more Namibians in their homes? And the Bank of Namibia, we are very supportive of that initiative to keeping more Namibians in their homes within a culture of financial stability.
They have been directed to stop the debt collection drive. I think my question then to that, as the advisor to the Ministry of Finance in relation to debt issues and amongst other issues. I think to one extent Nampower was considering also getting funds from the World Bank, which was going to be guaranteed by the government in that space. And I think Nampower already has debt from the German Development Bank and also the African Development and other development banks as well. I think how, first question is, how do you think that is going to hamper economic activities going forward, if then it so happens that Nampower, then the debt levels continue to skyrocket and their cash continues to be squeezed? We'll probably be going to see Nampower coming to Treasury and get more money, which and then in consequence will also raise national debt. And then that's the first part. And then the second part is do you think there's also now a wise thing, I think, I'm not asking you to speak for the Ministry of Finance, but is this probably what we're going to see for all other entities, that when we start collecting, then on that end they will see government's involvement in telling them that what their plans of collecting debt is. And I think where you also, I think, as a central bank consultant in this particular matter, as it relates to you are advising the state as you being the custodian party of how much they borrow.
I tend to deal with that. That is quite fundamental. We can come back to your question. Last is, I do not have any detail about the grounds on which the Minister of Finance requested Nampower not to proceed with the actions they have widely publicized. So the first thing we need to do is try to understand what is that. It will be very strange to me for the Ministry of Finance just to go and tell Nampower to won't continue doing this without having a good reason how to assist Nampower. Because I'm not so sure whether we send the right signal around that. If you do that, Nampower has got obligations in terms of electricity that needs to be paid to ZESCO, to ESCOM, to others. They've got international debt. And if they want to raise money to make good on those promises they made, I don't think any reasonable person would just go and tell Nampower. I don't know whether it's a balancing act on the part of government to try and see whether they cannot come to some amicable solution. But we need to understand that. So I wouldn't want to comment on whether it's a good thing or a bad thing without having that information. But I doubt that the Minister of Finance would go out and tell Nampower, knowing all these obligations, to stop this without having a reason or helping Nampower to deal with that. So let's understand that first. What's from a monetary policy we could talk about is You know, we've been talking about, and we will be talking about that tomorrow in bigger detail when I give you facts and figures and the dialogue. What we have seen is that administered prices from on our electricity, on our water, on our fuel taxes, communications, on recharges for data, that's running way ahead of inflation in our country. It's very expensive. And what we need to do is it a problem at NamPower, or is it at NamWater, or is it at local authority level? We need to figure that out. But what we have seen from the work that we have done, because most people are saying most of our inflation is actually only imported. Yes, that's true. But we try and understand, are there, because we saw core inflation is itching up or edging up. That is quite a concern. That's why we started understanding what is happening within Namibia, that's contribution to this stubborn inflation that we have got in the country. We've seen our administered prices from on water, on electricity, on fuel taxes, and on data that we need to recharge. It's above headline inflation. So as a country, what we need to do is to see whether we cannot adjust those, you know, within headline inflation, and not, as we have seen, significantly ahead as we've seen. But we'll give you more data around that.
Good morning, I'm Rina Kanyora from ABC. Like you said, inflation is mostly externally, inherited here. So, is there any chance of, Namibia that they might one day move away from the bank arrangement? And what does this actually mean for the ordinary citizens out there who are basically now, the higher the repo rate, the higher the inflation, the more they lose, and then we end up having people that are not actually having food on their table?
Those are good questions that you raised. So, doing nothing will be worse off for the majority of Namibians. Inflation is inherently negative for most of the people. The majority of Namibians don't have car loans and home loans. If we don't address inflation, it's going to affect the most vulnerable in our society. And we are losing that point. And people say, yes, we have got challenges with the middle class that have got currently loans with banks in terms of vehicles. And we feel with them. We've got empathy with them. But if we don't arrest inflation and bring it down, if we don't get the peg safeguarded, if we don't live up to our constitutional mandate, the alternative is going to be worse off. And it's going to affect those Namibians that don't have loans and those things more than what they're seeing at this point in time. Maybe what we need to do is to give you some facts and figures how, if the Bank of Namibia does not live up to its constitutional mandate, what the implications are. It will be dire for this country. This is a responsibility we take very seriously. We need to realize that as the Bank of Namibia, as a monetary policy, the people sitting there have got families, they've got friends, they've got children, they are affected by this decision. But we need to do what is right for the country. And we don't seem to get through to our people with that. And this is not permanent. We have seen interest rates getting up to those and coming down again because we take the right actions as a nation and as a central bank. So the alternative of not acting will be worse off for the majority of Namibians. So that's the first one that we need to understand. Did I respond, or did you have another point that you want to raise? What was the second point?
Peg arrangement.
The peg arrangement, is there any chance that there is one?
At this stage, so what we have done is we have done some simulation, and from a competitiveness point of view, the current peg arrangement in South Africa is the most competitive arrangements that we have at this point in time. Whether Namibia will have to deal in some future point, that's not an argument that we need to get involved in at this stage. But as a nation, we are an independent sovereign nation, and we can legislate and do what we think is in the best interest of the country. But as the Bank of Namibia, the PEC arrangement with South Africa is currently working for us, and being a member of CMA currently, the benefits of that membership outweighs the cost that we see. And this cost is temporary. We hope it's seasonal, it's going to come down, the action that we are taking at this stage. Is there any other question?
Lazarus?
The NPL.
Yes, the NPL. You want the latest figure. We'll get that for you.
We'll get that for you from Emma and Sanet. I don't have that, so but we can get those for you. All I can tell you is that the NPLs are not at the level that we are as a concern as a central bank.
My name is Joshua Sinji. I'm an intern from Internal Audit. I just have 2 questions that I want to ask you today. Regarding increasing the repo rate by 50 basis points, does it really mean that we are actually getting inflation rate? Are we reducing inflation rate like this? Given that from the previous announcement that was announced the second time, it was raised by 25 basis points, and it seems like the food prices never, it didn't reduce, it wasn't reduced, it kept on going up. Does it mean that this is going to solve the issue of prices going up? And the second one is on the mortgage loans. Does it mean are we really trying to solve the issue of this, or do we need to educate our people regarding maybe borrowing money for maybe consumption purposes? Don't you think that we need something to educate? We need to educate our people to stop maybe borrowing, because things are getting worse. I feel like dialogue is getting better.
All right. Thank you so much.
Thank you very much. I said we are doing that to anger inflation expectations. We are doing that to fight second round effects. We are doing that to safeguard the currency peg. We are doing that to support the economy. In the broader sense, if you want to engage with that, I'm happy to engage with what that means. In terms of should we educate our people, you're probably right. What we need to do, we need to change our behaviors. Interest rates are not at the level where they were last year. So if you continue in terms of your personal expenditure as if nothing has changed, maybe you need to ask yourself, shouldn't I change my spending behavior at this point in time, because interest rates are up, I need to pay more on my mortgage, I need to pay on my car, shouldn't I cut here and there until this thing is controlled again? I can assure you, and I want to engage you, we will win this fight against inflation, and we will bring down interest rates to a level that we think is appropriate for this country. The area that you should have asked, that we are concerned that we have raised around, is about currency depreciation, the impact thereof. Because many people think the repo rate is the problem. And many people say the repo is going up again. Repo is just a tool to achieve a certain objective. And what we need to understand is what's driving inflation so for the repo to be increased. The big thing that we should be worried about is if there is further depreciation of the Rand Namibia dollar exchange rate, that poses risk to inflation and how long we can get the repo that's now 7.75. So year to date, we've seen the Rand Namibia dollar has depreciated by about 12.2% against the US dollar. We think at this level the Rand Namibia dollar is undervalued by about 20%, and we think the depreciation is probably a function of a strengthening US dollar on the one hand, on the other, some idiosyncratic factors, particularly in South Africa. And that's grey listing in South Africa that you have got, that you see load shedding that you see in South Africa. And thirdly, you see the South Africa-Russia relationship that's impacting on the exchange rate that we have got. But those are issues also raised by the South African Reserve Bank in terms of what's driving the currency depreciation. But we see in the latest few days there's a clawback, and again this morning it's again edging up. So thank you very much for listening. Thank you.